Good morning, everyone, and welcome to today's information webinar for the SP Property Trust. We're just going to wait another minute or two just for a couple of stragglers to join us. So sit tight and we'll get started shortly. Let's get started. So good morning, everyone, and welcome to today's information webinar for the SP Property Trust. For those of you who don't know me, I'm Eliza Bennett, and I'm the General Manager of Exceed Capital, and I'll be today's moderator. The objective of this webinar is to provide a briefing of our latest investment opportunity, the SP Property Trust, a wonderful A-grade office building located in Southport on the Gold Coast. Before I introduce our panel, I've got a little bit of housekeeping. So today is going to be a one-sided webinar with a Q&A session at the tail end. So we will be using the Q&A function today. So please pop any and all questions through that Q&A function. The chat function has been disabled. So again, please use that Q&A function if you're thinking of any questions. And if you're thinking of it, I'm sure everyone else is too. So please don't be afraid to ask. Today's session is being recorded, so if for some reason you're unable to stay for the entire webinar, you'll be sent a link to rewatch or catch up at a later date. So today's panel, we have an amazing group of people. Firstly, we've got Wayne O'Loughlin, our Head of Funds Management. Good morning, Wayne.
Good morning, happy to be here.
Wonderful, glad to have you. Wayne will be taking us through the investment side of today's investment opportunity. We also have Adam Wilmore, the Transactions Manager. Morning, Adam.
Morning, Eliza.
Welcome. Adam will take us through what we call the why and what of the SP Property Trust. We've got myself, Eliza Bennett, General Manager. I'm here to moderate today's session and also provide a brief overview of Exceed Capital as a business and how we've evolved and expanded in recent times. And lastly, we have Vaughan Hain, our Managing Director, joining us here today. Good morning, Vaughan.
Morning. Good morning, everybody, and thank you very much for taking the time out to join us on this webinar. We're looking forward to this. We believe it's an exciting opportunity and absolutely look forward to hearing more from the team about this. Today on the webinar, we'll have a mix of existing investors and new investors. So welcome everybody. And as Eliza mentioned, please feel free to forward through any questions and happy to answer those at the end. The last 6 months for Exceed Capital has been really busy, which is fantastic. We acquired 4 new acquisitions or 4 new assets along the eastern seaboard. And we also sold 1 asset, which was our Beanley asset, and investors were pleased that they got back a return, an IRR of 17.1% per annum on that. So every $100,000 investment, they received $170,000 back at the end, as well as a fantastic return, cash return along the way as well. Now, today we're excited to talk about our new opportunity for 2026. So I just want to touch on a few points which the team will go into in more detail through the presentation. But at a high level, the region. We've been in the Gold Coast with owning assets there for sort of 5 odd years now, and identified the Gold Coast as a very strong region. It's changed from its original tourism days of purely just being around tourism. It's had the strongest population growth across Australia. in the last few years. So and that's been expedited through COVID. And that's not just retirees moving into the Gold Coast. That's actually about young families with affordability. So we've seen the office market there go from leap to leap or strength to strength, so to speak. With A-grade office vacancy at less than 2.7%, which is one of the lowest across the country. And we've seen rents increase from or increase about 40% in approximately 2 years or just over. And that, like I say, it just hasn't happened in the last few months. It has been over a period of 5 years, and it continues to be a very strong area. The investment that we're going to talk about today, for those who don't invest with us already, we are very conservative around our modelling. As the name says, Exceed Capital, we like to exceed our investor expectations. And with the modelling, we have forecasted a 8% average cash return to investors, but that excludes extra rental uplift that we may be able to obtain over that period of time from the market, etc., through renewing leases. And Adam will touch into that a bit later. So that's over and above rental reviews. We also very conservative that we make sure that we raise additional equity up front to cover ongoing leasing and capital expenditure items. So we've always got the funds there to deal with those things if need be. This asset we're buying at approximately 50% below replacement cost. So to put that in perspective, if you were looking at shares on the stock exchange and somebody said to you that whatever it may be, one of the banks or something like that, you could buy it at a 50% discount to its current value, most people would be in boots and all. So it may be just worth considering that when you're looking at this investment, that we're buying the asset well below its replacement cost. We've also, as mentioned, we've been in the Gold Coast for a little while. We've got 2 assets down there at the moment. This will be our 3rd asset, and pleased to say that those assets are performing extremely well. We've got one at Varsity Lakes that is on a tracking IRR at around 40% per annum return. And then we've got a Robina asset down there, another A-grade office building, where that's tracking at an IRR of around 25% return, and that's a newer asset that's been acquired a couple of years ago. So we really know the Gold Coast, we really know office down there, and we're really excited about this, and I look forward to hearing more about this opportunity from the team. Thank you.
Thank you very much, Vaughan. Thank you for joining us today. And Vaughan will be popping back later to answer any questions you may have, so feel free to pop them through. So just a quick overview of today's webinar. I'll shortly run you through who Exceed Capital is, and then I'll hand you over to Adam, who will take you through the Gold Coast market and the Seabank asset that we're purchasing under the SP Property Trust. Wayne will then take us through what the SP Property Trust looks like for investors, followed by a live Q&A session where you can have all your questions answered. So let's begin. For those of you who are new to us, who is Exceed Capital? So Exceed Capital is a fast-growing investment manager with a property portfolio nearing 500 million in assets under management, shared across 15 properties. As Vaughan mentioned, 4 of those have been purchased in the last 6 months. These assets are across Australia, with a large number situated along the eastern seaboard in Queensland and New South Wales, ranging as far north as Townsville and down to Newcastle, but we've also expanded across to Adelaide too. We like to let our numbers speak for themselves, and in just shy of 10 years in operation, we have a portfolio average cash return of 8+% per annum and a tracking IRR above 20% per annum for our portfolio, which is a great reflection of the hard work that's being done across the board. We've got a growing team of nearly 20 team members now, with many functions brought in-house to improve efficiency and help lower operational costs. We're a values-driven investment manager, and that is our differentiating factor. Our team, our family, our friends, they all co-invest in every trust, and our fees are aligned with our trust performance. We truly believe on alignment with our investors. Where most investment managers charge fees on assets under management, we charge on income, which is a key differentiator in this industry. This helps keep us aligned with driving results for our investors. We also are very disciplined and exceed what is expected of us through audits, governance, and doing what is right every day. We're very clear and honest with our communications. We don't hide away from our difficult conversations. And we also provide direct access to our decision makers. Vaughan here has every single investor's number in his mobile phone, and they're free to call him and contact him with any questions at any time, just like with any of our other team. We take great pride in our assets and provide stewardship across them all. We target great high quality and counter-cyclical assets to provide long-term value to our investors. Exceed also provides proactive asset management, actively managing our properties to drive performance, maintain occupancy, and strengthen tenant relationships. Overall, we value operational excellence, and we invest in technology and systems to provide and improve efficiency, transparency, and overall investor experience. We also let our ESG principles guide our decision-making with a focus on energy efficiency, community engagement, and long-term sustainability across our assets. Now that you know a little more about us, hopefully you see that we're a little different to others out there in the market. But that's enough from me and about us. Let's move on to this great opportunity. And I'm going to hand over to Adam, who's going to take us through the Gold Coast market and provide some insight on the Seabank asset we're purchasing under the SP Property Trust. Over to you, Adam.
Thanks, Eliza. So starting at a high level, when looking at areas to invest across Australia, one of the best investment reasons to pick a particular market is strong population growth. And the Gold Coast region has one of the fastest growing populations in Australia. The Gold Coast population is expected to reach 1 million people by 2040. So that's another 250,000 people over the next 15 years or so. Population and economic growth leads to demand for property and all types of property. So more hospital beds, more hotel rooms, retail, industrial, and even office space. According to CBRE research, for every 1 million people, a city needs 800,000 square metres of office space. The entire Gold Coast market right now is only 462,000 square metres of office space. And based on the current population, the market should be at least 545,000 square metres right now. That's a shortage of 83,000 square metres of office space, which is a need for 10 more Seabank buildings right now in the market. So there's therefore a severe undersupply of office space, and it's only going to get worse as population grows and limited supply comes online. A large reason why supply is restricted is that residential apartment developers down the coast can pay more for development sites than office developers down there. That's because they can sell completed apartments at a much higher rate per metre than a new office building would achieve. The second graph there shows that the Gold Coast economy is growing and diversifying, with the major employers now being construction and healthcare. The Gold Coast is no longer a boom-bust tourist town that was only reliant on tourism. It's a large and stable and diverse economy. And a diverse, large economy requires office space for the white-collar workers. As the economy and population continues to grow, it will continue to drive additional demand for office space. For those that don't know, the other image on the screen is for the Gold Coast Arena. So that's going to be located very close to this asset we're purchasing across the road on the Gold Coast Broadwater Parklands. It's a $480 million investment, and it'll be the state-of-the-art indoor venue designed for live sports and concerts and music events. Construction's expected to commence in 2027 and completed in 2030. It's expected to be a key Olympic venue for the Gold Coast and may host the basketball for the Olympic Games. In regards to how this is going to impact on our asset, there could be some short-term pain with noise during construction and things. And should that worry some tenants and we lose some tenants from that, Due to the strong demand and even the project space required in relation to the construction of this arena, we should be able to backfill any space with engineers and project managers and things involved in that construction. I think long term, it's going to provide great amenity for this area. It's going to attract restaurants, pubs, and things to service all those people that are going to go to these events in the future. So it's going to be great for this immediate precinct, but the Southport and Gold Coast areas as well. The Gold Coast office market, it has one of the lowest vacancy rates in all of Australia. And focusing on A-grade space, it's very low at only 2.7%. And the property council figures for the last 6 months have only just come out, and that's actually reduced down to 2%. So there's really only about 1,700 square metres of A-grade office space across the whole of Gold Coast that's available to lease right now. As I mentioned earlier, there's very limited new supply coming online. There's one new project planned in Robina, but that's going to make a very small dent in the required supply for the whole market. When you have very strong tenant demand and low supply coming online, it's obviously the perfect formula for rental growth. So we're expecting to see some great rental growth across this asset and I guess the whole Gold Coast market in general. We're buying this asset very well. There's comparable sales on the Gold Coast at a lot tighter cap rate than what we're paying for this asset. And that includes some smaller assets in the Southport area as well. We're paying roughly 8.5%, and there's other deals happening in the 7s to 8%. This is a very quality office buildings. It's one of the best buildings in Southport. And because of that, it attracts and is suitable for government tenants. When a government's looking for office space, they need disability access, they need PWD toilets, and there's not many buildings in Southport that can accommodate this. So we've got 2 big government tenants in this building. We should be able to attract more when there's more government requirements for that area. The Gold Coast is a very low incentive market. We've done a couple of renewals in the asset recently, working with the vendors at 8% incentive. And comparing to Brisbane, Sydney, Melbourne, incentives are generally 30 to 40%. So this market is a lot lower than a lot of the major CBDs. The high construction costs are limiting supply. The hard to find development sites is limiting supply. So like I said, it's only going to help that rental growth story. This asset's positioned in the Gold Coast official CBD. So Southport's the official CBD for the Gold Coast. And I think it's one of the best located buildings. It's on the Marine Parade frontage. It's got great views over the Broadwater and up and down the coast. Drilling down into the asset more specifically, so Seabank is an A-grade building, like I mentioned, on 12 Marine Parade. It's one of the best office buildings in this precinct. It's an 11-storey A-grade building. It's walking distance to Australia Fair Shopping Centre, just down the road, which has over 200 tenants in there. There's 40 dining options for employees in the building to go and have lunch. The building has passing rents of roughly in the low $500 a metre gross. Market rents for the building are already mid 500s to high 500s a metre gross. So there's already some immediate uplift we should be getting from any upcoming renewals. We have a great car parking ratio of 1:40 square metres, and that's very competitive compared to some of the newer buildings on the Gold Coast where they're only offering 1:80 square metres or sometimes even less. So we've got plenty of car parks to attract tenants. The building is also very close to the local light rail station, the new G-Link light rail service on the Gold Coast, less than a 5-minute walk away. And the building itself, it's rectangular, it's side core, it's got windows on all 3 sides, so it's got great natural light. It can easily be split into smaller tenancies. They all have lift presence and great natural light. And great views down over the Broadwater and, like I mentioned, up and down the coast. In addition to government tenants and large corporates, there's also attracts SME tenants like the local accountants and those sorts of groups. And because of the low incentive market, it's very hard for these tenants to relocate, because if they're only getting an 8% incentive, they have to dip their hand into their own pocket to fund a fit out, which they don't like to do. So tenants will be very sticky to the building. And one other very large selling point for this asset is the underlying zoning of the land. So the building is on a large site in the Southport Priority Development Area. So that's a precinct where the state government and council really want to see some major development. And as an example, a building just not far from this site with the exact same zoning has an approval for a 101-story apartment tower. So we have the same zoning and the same development potential on a large site right here in Southport.
Thanks, Adam. It sounds like an absolutely great asset in the great location, definitely prime for some growth. So now I'm going to hand over to Wayne, who's going to take us through what the opportunity looks like for our investors.
Thank you, Eliza, and good morning to everybody on the call. So I'll firstly run through the structuring of the investment, and then I'll follow that up with performance metrics and forecasts. So 12 Marine Parade, or the Seabank building, will be acquired by the SP Property Trust for $44.7 million. And that will be placed within our traditional structuring, which is a single asset closed-ended wholesale unit trust with a minimum investment term of 5 years. I'll save myself a Q&A question there and just break down the structuring a little bit more. So what that essentially means is 12 Marine Parade will be a standalone asset in the trust. So essentially, it's as close as you're going to get to direct investment of a property. So, you know, in that the cash flows, the opportunities, the benefits, and the risk all relate to that one specific asset. So that's you know, it's a structuring that works for a lot of people because it's very simple to understand. It's you know, what you're buying into. You know, the asset it's just that one. So as for the closed-ended component of it, so what that means is the opportunity will be closed once we've completed the initial equity raise. So essentially, we raise the equity up front prior to settlement, and once that's done, there's no further equity raises. So it is an illiquid investment, and that means that investors should be prepared to be committed for the full 5-year investment term. So under the IM, we will be raising $31.5 million of investor equity. So that will be issued at $1 per unit. We'll also be supplementing that with a financing component through an Australian lender, which will be at $22.35 million. And as we typically try to do, we usually try to get 5% additional headspace, which can help with risk management throughout the process. So we'll be seeking that in this case as well. So of that $31.5 million, will be $3 million will be allocated towards leasing costs. So, you know, things like leasing commissions, marketing, you know, legal costs, tenant fit outs, things like that to help us fund those so it doesn't draw from property cash flow. And a further $2 million will be earmarked for capital expenditure. So those funds, $5 million combined, they'll always be working for investors whilst unutilized. So we'll have that sitting as an offset facility against our mortgage. So that way reducing the interest costs of the loan. So from a performance perspective, as you can see on the screen and has been mentioned previously, it's 8% as a forecasted return as an average over the 5-year investment timeframe. So to put that in simple terms, if you were to say have a $100,000 investment, it would be on average an $8,000 cash distribution per year on your investment, or $40,000 over the five-year investment term. So the forecast is broken up, and you can refer to the IM to confirm, but it's 7.85% in the first year, 7.9% in year 2, 8% in year 3, and then subsequently increasing over the latter years in the trust, which, you know, brings about that average of 8% that we're targeting. So just a note with that growth over the 5 years is that's based on 3.5% rental growth, which we've assumed in our model, and that's based off our current tenancy profile and our existing leases. But as Adam just mentioned before, the current rental rate on average is around that 510 per square meter in the building, as opposed to the current rent market rent that's being achieved, which is around that 570. So we've modeled that 3.5% increase, but the difference between what we're renting and the market rent right now is about 12%. So there's some potential upside there, and we'll be working to reset those leases and bring them to market rent early in the term, with about 10% coming up within the first 6 to 12 months alone. So as also was mentioned earlier, there is a 8% vacancy rate in the building at the moment. So we have had the vendor agree to provide a 12-month rental guarantee over those suites, which means essentially that it will be income producing over those suites for the first 12 months. So we'll hit the ground running as soon as we acquire the building and try to lease those out as soon as possible. So over to tax deferred benefits. So we're forecasting a 40% average tax deferred benefit, which, as Vaughan mentioned, that stems through from depreciation, amortization, etc., which flows through as tax benefits for investors. So what that means is more after-tax profit in your hand. So typically higher in the first couple of years as we get those depreciation benefits and tapers off in the latter years, but on average around that 40% mark. So if anyone needs me to talk through tax deferred benefits and how they're calculated, feel free to pop something in the Q&A and I'll get to that. So just to quickly touch on a couple of our other investments in the Gold Coast region. So I just want to highlight these just because they're our strongest performing across the portfolio. So VL Property Trust and RO Property Trust in particular. So you can't see where I'm pointing here, but second from the bottom, there's the targeted cash return, 9% for VL and 8.8% for RO. So these are both currently performing in double-digit returns, so well and truly exceeding our original targets, with VL at 16% per annum as a cash yield and RO at 10.6%. So, performing absolutely fantastically. It's safe to say that, the strategy we've implemented in both of those assets has been very successful. Granted, Varsity was a slightly different strategy. That one there we purchased as 50% vacant. And we've got it at a very good price because of that, but it required a very heavy-handed approach to repositioning the asset and to reposition it and it was capital intensive. But what happened was we were able to get that occupancy up to 100% within or just a little over 12 months. And in doing so, it significantly increased the value of the building. So we purchased that one at 12.6 million and just recently had it valued at 23.4 million. So almost doubled the value of the asset. And that's what's flowing through to that incredibly high tracking IRR figure that you can see there of 40.89%. RO Property Trust is more of a like-for-like comparison to CBank in that when we purchased it, it was at roughly 97% occupied. So similar sort of thing where we're buying it at full occupancy. A lot of people would just hold that and take the passive approach and collect the income, whereas for us it's always about the active management approach. So we got in touch with tenants, tried to find out their pinch points, what wasn't working for them in their tenancies, restructured leases, reset leases to try to build the WALE, but ultimately try to increase that rental rate per square meter over each floor. And obviously can't change the floor size or anything, but through doing that, have increased the gross rental over the entire building with the same floor plates by just over $1.5 million in 18 months. So that's driven up the distribution yield as well as been very well serving for the capital value of the asset as well. Can't promise that same result for CBank, obviously, but just wanted to highlight, that is our strategy, and that's what we'll be employing with CBank. Getting in and trying to find any value uplift opportunities where others might just, sit on it and collect that passive income. So just moving over to the key dates in relation to this product. So applications open on the 27th of January. So we've been running the capital raise now for 2 weeks, and there has been some strong support. We have about 4 weeks remaining through to the closing date of 13th of March 2026. When submitting your application, we do require a 10% deposit. So that helps us to fund any pre-settlement costs such as property deposits and legal fees, things like that. And then there'll be an additional call on the investment funds in late March. So that'll be for the 90% balance of funds, and is usually about 2 to 3 weeks prior to the settlement day. So that way we have time to get all the funds in and make sure there's no surprises come time to settle, which, as you can see on the screen there, is targeted for mid-April 2026. As I said, any questions or anything, just pop it in the Q&A and we can flesh it out in that. Thank you.
Thank you very much, Wayne. So absolutely, like Wayne just said, pop any questions you may have over in that Q&A function. I'm going to invite Vaughan back into the room to answer some questions with us. So I have a couple here already, but pop any through that you may have now that we've gone through the presentation. The first one's for you, Wayne, and it's everyone's favourite question of when will that first distribution be paid?
When will I get paid? I guess that's the name of the game, so that makes sense. Well, on the basis that we do have a mid-April settlement, it will be paid at the first distribution will be paid at the end of May. So typically we aim for a distribution payment on the 28th of each month. There's a reason that it's paid in arrears, and that's because we pay on actuals. So essentially we've got to collect the income, we need to process the accounts, calculate the distributions, which takes a little bit of time. So we just stick it for the end of each month. So the first one, mind you, for SP Property Trust, just because of that mid-month settlement, it'll only be for a portion of the month, obviously, because it's been owned for part month, so it'll be a little bit lower than the standard monthly payments, but thereon it will be monthly and the full amount.
Perfect. Thank you, Wayne. Adam, one regarding the Gold Coast rents. Are you able to take us through where they're heading and help us understand where we expect the Seabank rents to get to?
Sure. So the office market, like I mentioned, is severely undersupplied, and that's not going to change anytime soon. And essentially office rents are going to go from strength to strength. So they're going to continue to increase. Incentives are still going to remain low. So over the coming years, we're expecting significant rental growth. It's hard to predict exactly where it's going to be, but from examples at Robina and Varsity Lakes, we've seen nearly $200 a square metre, a rental uplift over the last couple of years. So who knows if that's going to be the same moving forward, but all indications are that rents are going to continue to increase dramatically because of the limited supply coming online.
Thank you. We've got one in from Jeff. So this one I'm going to throw to you, Vaughan. If rental income is higher than expected with additional funds, do you increase the cash returns over time or use the cash receipts to reduce the loan?
What we do is generally increase the cash returns back to investors. So as Wayne pointed out before, in a couple of our Gold Coast assets there at the moment, those returns back to investors, the cash returns are well above where we forecasted. And that is exactly that scenario where we did receive higher income through renewing those leases, and we have passed that back to investors. There may be the occasional time where we may hold a small amount back for fit outs or something like that, but generally it's passed on to investors as it's investors' money.
Wonderful. It all goes back to investors. Got another one here for you, Adam. How can we add value to the asset? And as a subsequent one to that, is there an exit strategy in mind for the asset?
Yeah, sure. So adding value. So even though the property is 92% leased, we think we can get it higher. So we have very hands-on proactive management where we'll be driving the leasing agents to get it leased. And if there's any reasons why the tenancies aren't leased, we'll spend the money to fix those. So as an example, if there's a tenant that's done a full make good and there's a space sitting there with no fit out in it, we'll get in there, we'll build a spec suite fit out, and then we'll get a premium rent from a tenant coming into a newly refurbished, a newly fitted out space. As another example, for the building, there's a small retail tenancy behind the cafe that's been vacant. There's been interest from barbers and hairdressers and things in it. but it hasn't leased because there's no water connection. It costs $20,000 to put a water connection in there, and the current owners haven't worried because it's only a $30,000 a year lease space. So we got the funds to spend the money, put that water connection in there, and we should be able to lease that space up. So that's just one very small example of how we can add value and increase the income. And in regards to an exit strategy, so over the investment term, the team will be driving rents, pushing out the WALE, making it the most attractive investment proposition for the end of the 5-year term. But in addition to that, as I mentioned, the underlying zoning of the land allows for a major redevelopment of the site. So because the 5-year trust term finishes right before the Olympics, it's probably, I think it's going to be a good idea to get a development approval, or maybe even just a scheme showing a big redevelopment on this site. And there'll be a lot of offshore investor attention on southeast Queensland just before the Olympics. So if we don't sell it for a great price as an investment, I think there's an opportunity to potentially sell it at a great price as a development site.
Perfect. Some great opportunities there and some forward thinking. Wayno, who will be financing this, the debt side? Have we secured that yet?
Yeah, so with every acquisition, we run a tendering process. So we invite all major Australian banks as well as some mid-tier lenders to submit a proposal. So that has been completed with SP Property Trust, and we've now agreed high-level terms with ANZ to finance this asset. They were very competitive. We were able to achieve no line fee, which is a great outcome, as well as having a 138 basis point risk margin, so very low, and that's great, which means we're definitely on track for our interest projections throughout the term.
Perfect, great. Vaughan, this one I'm going to throw over to you. So we've been open for 2 weeks now with our capital raise. How has it been going?
Yeah, the feedback has been really good, which is lovely. We've had strong interest from our investors on this. We are at approximately just under 60% allocated already, which is great. As Wayne mentioned, we're only 2 weeks into our sort of 6-week capital raise period. If anybody's got any questions or anything, feel free to reach out. It will be fully subscribed, and don't miss out, I guess.
Absolutely, get in quick. It's definitely a great opportunity that's filling up fast, and why wouldn't it? So you've touched on it already in regards to the 5-year potential sale at the end there, Adam. But Wayne, in terms of the trust, what happens at the end of the 5-year trust term?
So at the end of a 5-year trust term, we'll take it to an investor vote as to decide on the future of the trust. And so typically there's 2 paths it can take, and one being sale of the asset at that point, or the other option being extending for an additional term. So in that situation, what we'll do is generally provide a recommendation. So what we'll do is provide an explanatory memorandum. It'll outline the current economy, market conditions, whether it's the right time to sell or not, if there's anything with the asset that still needs improving, whether that's vacancies or outstanding lease incentives, things like that, and essentially recommend a decision. So let's say, for example, sorry, just go back a step. So for a vote to pass to extend the trust term, we do require 75% of investors to vote in favour of that extension. So in that circumstance, you can have some investors that might have voted against it and wanted to sell, but the vote ultimately passes because it's got the super majority. So what we'll typically do in that circumstance is offer some sort of exit mechanism, whether that's a transfer of units or a redemption facility to those investors that voted against the renewed term. So not holding on to them or dragging them through another 5 years.
Thank you. And so, yes, for our investors, they need to be willing to be in it for that 5-year investment term. It is that a liquid investment there.
That's correct.
Another one for you, Wayne. What is the minimum investment amount for our investors, and are there any requirements for them for investing?
So minimum investment is $100,000. This is the standard minimum across all of our investments. Anything above 100,000 must be in $5,000 increments. And second part of that question was any requirements. So I did mention at the start, this is a wholesale product. So we do need our investors to, unless to establish that you're wholesale, it's either if you're investing over $500,000, you're automatically wholesale. But if not, we require an accountant certificate to prove that the investing entity does satisfy the requirements of wholesale. So if you want more information on that, I can provide it to you. But ultimately, yeah, that's the main conditions. There's obviously identification requirements as well as part of AML CTF obligations that we have. So, that can be identifying your entity, whether it's, if you're investing individually, typically it's just your driver's license or a passport that's unexpired. Or, things like trust, we might require a copy of the trust deed, certified identification documents of the directors or what have you of the trustee. So yeah, it's very specific for each investing entity. So yeah, I won't go into them more on here, but yeah, it can be found in the IM. It's all broken down.
Yeah, absolutely. So there's a lot of information in our IM, so feel free to request a copy if you haven't already for more of those details. Otherwise, feel free to reach out to us if you need any clarification as well. We have our signature product, the Collective now, which is our diversified fund. Vaughan, will the Collective be taking a stake in SP Property Trust?
The answer is yes, it will be. For those who are not aware of our collective, as Eliza mentioned, it is a diversified property fund, which at the moment has exposure to 5 different properties itself. It did take a exposure of about $7 million in our last closed-ended trust, which was 8 Mile Plains, the EMP Property Trust, and we're probably looking at somewhere maybe around $5 million allocation to this one under that trust for a small exposure there.
Perfect. So if investors wanted that diversified portfolio instead, but still wanted exposure to SP Property Trust, they could absolutely invest in the Collective.
For sure. The Collective is a fantastic product as well. We do see it as our ongoing product that will always be open and look to grow from strength to strength. However, we will always be doing our single asset trusts like this as well. There's a purpose for both in the market, and it helps investors with different requirements and different needs around things like that.
Wonderful. Thank you very much. So it seems like that's all our questions. If anyone has any last minute ones, feel free to pop them in the Q&A. But while we do that, I will take you through how to invest. So first off, get in touch with us, give us a call if you want any more questions answered. That can be done through giving us a call, sending us an email. Request an IM if you haven't already received one. That has a lot of information in it for you to go through, read through, help digest, explain further. And then if you're happy and want to invest with us, submit an application form. This can be found in the back of the IM. We can send through a separate application form or complete it online through our investor portal. And as Wayne mentioned, we'll need that documentation supplied with that investment, the application, as well as the 10% deposit for the investment to be secured. So please reach out to us if you have any further questions. We would hope to see you all soon, hear from you soon. We want to collectively grow wealth together. And we thank you all for being here today to hear about our latest opportunity, the SP Property Trust. We hope you have a wonderful day.
Thank you very much, everybody, and we greatly appreciate you taking the time out to be with us and listen to the webinar and be interactive on it. Thank you.